Good evening. Welcome to our presentation titled Understanding Insurance, Protecting Your Future Today. This is part of our Money Matters series here at the Champaign Public Library. I'm Eva Liu, a reference librarian at the library. Thank you for joining us. I would like to introduce our presenter for the evening, Bret Kroencke. Bret has been in the insurance and financial industry working for Country Financial for 25 years. He provides insurance and financial products and services, including auto, home, life, farm, commercial insurance, as well as retirement planning and investment management. Throughout his career, he has made the Million Dollar Roundtable twice, All-American 8 times. This is Country's highest distinct award, and Country All-Star 9 times. Bret, thank you for being with us here, and please help me welcome Bret Kroencke.
Thank you.
Thank you.
Thanks, Eva. I appreciate you guys having me out here tonight. I just want to share a little information with you guys about insurance and get everyone up to speed on basically property casualty insurance, and I'll touch a little bit on business and on life insurance. So I appreciate everyone coming out. Thanks, Eva, for inviting me. So tonight, we'll give you a little bit of background on myself. Eva did a good job, but also I'm originally from the western part of the state near Quincy, Illinois. I moved to Champaign in 1992 to go to the University of Illinois, and like so many others in this community, I did not leave. So I'm still here, love it here. Got a wife, Janet, that works at the University of Illinois. I've got a daughter that is a junior at the University of Illinois and a son that's at Centennial High School. So like Eva mentioned, I've been doing this for 25 years, and it's something that I did not go to school for. I thought I would never get into the business of insurance. Didn't really thrill me. I got my degree in sports management, sports marketing from the University of Illinois. My first job out of college was at the U of I athletic department. Thought that was the route I was going to go. Started my own company, became a sports publicist for sports celebrities, and traveled the United States doing that. They made all the money, I made none. Decided, hey, I've got to figure out a different career path that would be good to cut back on the travel and be good for my family. So that's kind of how I got into the insurance business. One of the things that really gravitated me to it is the opportunity to help people. So what we're doing is we're protecting people's needs. We are advising people on what's best for them. We are, listening to them and letting them tell us what they have and how we can protect it. A lot of people work so hard for different things, and it's very important for insurance to protect what they have. So I'll jump right into this a little bit. Let's see here. There we go. So basically, I will touch on these different things tonight. I'll touch on the definition of property casualty insurance, the importance of property casualty insurance, the different types, the industry trends and challenges. Then I'll briefly talk about life insurance, and then I'll open it up for any questions, okay? So property casualty insurance basically is insurance that provides financial protection against losses and protects from property damage and legal liabilities, okay? So it's easier than what I just read, but property insurance also covers physical items like your home, your car, your business. It's all about protecting these forms of risk from things like theft and fire and natural disasters, okay? Casualty insurance is your liability coverage. So basically what that's pertaining to is things that you would be negligent for. Things that might keep you from being sued, or if you're being sued, to offer you the protection if you're being sued. So one thing that insurance does is basically it is transferring the risk from the person or the business to the company. So one of the things that's very important is deciding, do I want to accept this risk as a business and as an individual, or do I want to pay someone to take on this risk? Okay, So it's a way to mitigate your loss, which is very important. So yes, it becomes a huge expense. It's a huge expense for the homeowner, the auto owner, the business, but it's one way to push off the risk of anything that might cause them a catastrophe or that would be a financial risk to them, okay? People work so hard for what they have, it's very important to protect it with insurance. One of the things is it protects you with compliance for legal requirements. As many of you know, in the state of Illinois, it is required that you carry automobile insurance. Right now, they estimate that over 1 million people are driving throughout the state of Illinois without any auto insurance, okay? What that does is that increases everyone's auto insurance that is driving legally. So, but in the state of Illinois, you're required to carry liability coverage on your auto if it's licensed and titled and it's appropriate to be on the road. So, so the other thing is workers' compensation. So this is another one that is required if you have employees. Basically, it is protecting you if one of your employees gets hurt. It's covering for their injuries, for their lost wages, pain and suffering, those types of things. It's very important. I mean, if they weren't required to carry that or they didn't carry it, one of the things that could happen is that that could bankrupt a company, by just having to pay those losses. The other thing is it just maintains your financial stability. So basically, like I mentioned earlier, to keep people from getting into your assets, you have to be properly covered with insurance, okay? So one of the first things about home insurance I want to talk about is it covers for damage to your home and to personal property. So there's a bunch of other coverages within a policy, but that's generally what it covers. So your home is covered for hail, wind, fire, theft, all these things it's protected from. And so basically a lot of those things, if not all of them, are almost out of your control. So what happens when something like that takes place? First you're down and out, you're upset, you've just experienced a loss, and it's very important to have someone that you trust, a company that you trust, that you can go to and rely on to be there in your time of need. That's one of the most important things about insurance is that you have someone that will be there when you need them, okay? That's what you pay for. Some things that are not covered that I'd like to just talk about is flood, earthquake, sump pump and sewer backup. One of the reasons I mentioned that one, that's one of the most common ones here in Champaign County, is we have a high water table. We have a lot of water that backs up in people's basements, and you have to have that proper coverage added as an endorsement if you want to be covered for that. With flood insurance, something big that we hear down in Florida right now, that's going on. And basically you have to buy a policy, a separate policy to cover flood. And it is basically ran through the National Flood Service, and they select certain companies that write it. So almost every agent can write it, but they have to write it through these certain companies. And then the other thing is there's limitations on policies on homeowners policies that people really don't know about. So some limitations are jewelry. Most likely, most policies carry up to only $2,500 worth of jewelry, okay? Silverware, $2,500 on most policies. Guns, $2,500 on most policies. Computers, electronics, $5,000. And cash and coins with a lot of policies is $200. Now, all those the limits can be bumped up, and you can pay for additional coverage. It's just how much risk is the homeowner wanting to take and how much risk is the homeowner wanting to transfer to the insurance company, okay, to pay for that. So there's all those things that are part of a policy. Another thing that's on there is medical payments. Medical payments is very interesting because you don't even have to be negligent for the medical payment to pay. So you have someone over at your house, they get injured, no reason that you did, so nothing that you did for them to get injured. They're injured and they automatically have whatever the medical payment coverage level is on your policy. So it's a very good coverage. It does not protect the homeowner for their medical. Like if a homeowner gets injured, that's not what it's there for. It's for guests that are over at your house that would get injured on your property. Additional living expense, very important coverage. Your house, you can't live in your house due to fire, wind damage, hail damage, or hail you'd probably live in your house, but fire, tornadoes, anything like that, you can't live there. So then basically you would have to live somewhere else. That is paying a percentage of what your home's insured for you to live somewhere else until you can get back in your home, whether your home needs remodeled, rebuilt, whatever. So it's a very important coverage and every policy comes with that built in. The other thing is provides liability coverage for things that you're negligent for. And it provides litigation protection too. So if you're sued, it's providing that for something you'd be negligent for. So just imagine all the different things that you could be sued for. The home policy will pick up protection. It does not pick up protection from like slander, libel. It does not pick up protection for like any intentional act, things like that. But if it's something, someone's over at your house, they trip and fall, and it's because something that you had in the yard, well, they would have the medical to cover the medical. They would have, if they sued you, they'd have the liability to cover the liability, okay? Also on homeowners insurance, this is pretty interesting and something that a lot of people have been discussing. You hear it a lot in the media right now, is the price of home insurance is just skyrocketing. And there's multiple reasons, but the biggest reasons I've put up here. And the first one is loss history. So when they're looking at your home insurance, when they're looking just at that policy, they're looking at your loss history. Have you had any losses? What type of risk are you? What type of losses have you had? Have they been weather losses? Have they been liability losses? Things like that. So it's very important. Your home value and rebuild costs. That's what also has to do with your home insurance. So, what does it cost to rebuild your house? And something that people need to be aware of is market value and rebuild costs are definitely two different things. Most of the time, the rebuild cost is more than the market value unless the home is a newer home. So in order to get the proper coverage, insurance companies, they run a replacement cost on your home. They look at what the cost of it would be to replace that home with new labor or with new lumber, new materials, and today's labor costs, okay? And they're so specific that the actuaries have done such a great job, they have those costs down by zip code. So they know what the cost would be. The cost here to rebuild a house is different than building it in Fort Worth, Texas. So the location also is a big deal. So fire protection. The ISO, which is a state rating company, they rate every fire department, okay? And it's based off of, response time, whether they're volunteer, whether they're staff, whether they have, how many trucks they have, how much water can they get to a site, what's all these different factors. And then every year they give them a rate. And then whatever their rating is, the insurance companies use them. And it has to do with like the distance you are from a fire department, the distance you are from a hydrant, all these types of things. And so that has a big a factor in it. If your house sits in Champaign, we have excellent fire protection here. The Andrew Kroencke, that is the head of the fire department here, they've done an excellent job of getting our rating down and keeping it down, and that helps out people's home insurance. If that house sit out in the country, you'd be paying quite a bit more, maybe up to 10 or 15% more, just because of fire protection. The next thing is probably not the biggest popular thing with insureds, but credit scores. So credit scores do play a part in insurance, and it's something that has not been around the industry, but probably for about 20 years. Some companies are even steering away from it a bit. Some companies still do it, but it is something that they feel that the insurance industry feels that if you have a better credit score, you might be more likely to take better care of your property or pay on time, those types of things, you know. So some companies use that as a factor. Another thing is, what deductible are you going to carry? So again, what risk are you going to take and what risk are you going to put on the company? So right now, with ever increasing costs of homes, of home insurance, it is more important than ever to take a higher deductible, in my opinion. Okay. Now I know that some people that's not feasible because they don't have that as in savings or whatever. But to offset some of the claims or some of the costs, it's one of the better things to do, in my opinion, to reduce the cost. When I first started in the business in 1999, I wrote a lot of $100 deductibles and $250 deductibles. Today, we write $1,000 deductibles or higher. I mean, we still write $500 if people want them or lower, but most people take out a $1,000 deductible or higher. And some insurance companies are not even offering dollar deductibles anymore. They're doing percent deductibles. So now if your home is insured for $300,000 and you got a 1% deductible, you've got a $3,000 deductible. Okay, so you've got insurance companies doing that. And then there's a factor on if you're covered for replacement costs in the state of Illinois, there's a factor that your home insurance goes up every year due to inflation, okay, to keep it up with labor and lumber, the dwelling amount coverage. So guess what? If you have a percent deductible, your deductible's going up every year too with it. So, all right. And another thing that can help is security features. So, you know, if you have a backup sump pump, if you have an alarm system, you have things like that. Unfortunately, they don't offer as big a discount as I would like, or I think that a lot of the reps would like in the industry, but it is a way to save a little bit of money. The next thing I'll touch briefly on is just renter's insurance and then condo insurance. Renter's insurance is basically the same thing. You are covering for personal property in your rental property, okay? So that's one of the things that renter's insurance is doing. It's also giving you the liability off the policy, so you do have the liability. It provides coverage for that as well, and it does have medical. Again, things can be added to it too. You can schedule items to be on there. You can schedule jewelry, you can schedule different items to be on there. For a condo is going to cover usually from the walls in, or what they call, from like where the walls start in or all in, everything on the inside. So it kind of depends on how the association's bylaws are written. And then as an insurance company, we get the bylaws, we follow the bylaws when handling a claim to see how they are written, and then we would adjust appropriately to, you know, whether covering bare walls in or all in. A condo association, usually the association is carrying a master policy on the actual buildings. So what you have there is the association goes out, they get a policy to cover all that, all the buildings and any other property that's associated with the association. And then you are each individual owner is getting a condo policy to cover the inside. So, and again, it covers for liability coverage. It also there is coverage for like loss of use. There's also a loss assessment, and I'll touch on that real quick because loss assessment with condos is becoming a lot bigger item. It used to only be a bigger item in big cities, but it's becoming an item here in Champaign because it basically means if you're assessed an amount when you live in a condo association, if you're assessed an amount as a condo owner to help pay for damages that were not picked up by a claim or the insurance wasn't enough to pick it up, then that would help kick in. So it's not for loss assessment. It's not due to if you get assessed because you guys need someone needs a new roof. It's if the wind blows off the roof, the association's carrying a high deductible, like a $50,000 deductible, and they don't have $50,000 in the account, then they can assess everyone in the association a certain amount of money, and they could turn it into their condo policy, and it will help pay off that. Okay? The next thing is auto insurance. And Basically it's covering damage to vehicles and any property that someone would hit. It is also providing you liability, and like I touched on earlier, that's something that is required in the state of Illinois. So everyone that has a licensed and titled vehicle is supposed to be carrying auto insurance in Illinois. Now, I'll touch on that real quick. The state minimums are $20,000, $40,000 for liability. So what that means is if someone gets in an accident and they're carrying the state minimum, they hit someone, they have $20,000 worth of liability coverage for that person that they hit. So if that person's injuries are $30,000, they're on the hook for the other $10,000. So carrying the state minimum liability is one, kind of careless, and two, it's not taking like personal responsibility for what you may do to someone else. Okay, it's not making them whole. Bodily injury liability, like I mentioned, so it's basically if you hit someone in another car, bodily injury liability is paying for their injuries in the other car, okay? Property damage, anything that you hit. So this is something that I try to touch on with my clients more and more because this is, the price of cars keeps going up, and people like a lot of times carry $100,000 worth of coverage here, and which is pretty nice amount of coverage. But what happens if you hit a car that's now worth $110,000? And we have those in this community. Or what happens if you hit a semi? I just insured a semi the other day, and the cost of the semi was $425,000. So what happens if you hit that semi? Do you have enough property damage coverage to cover it and protect it? Also, if you hit anything else, any buildings, any other, just had a gentleman 2 days ago hit a guardrail, and to replace that guardrail, he actually hit it out in the state of Pennsylvania. He got a bill for $7,000, $7,100. So collision coverage, it is covering your car for any damages it has, okay? So you get in an accident or you're in a hit and run, and like someone hits your car and they take off, or you're in a grocery store and you come out and you got damage, that's where your collision coverage would come in. So if you have collision coverage, you would be covered. You would just have to pay your deductible. Your insurance company would pay everything above and beyond it. So the other type of coverage is comprehensive coverage. Comprehensive coverage, covering things kind of out of your control other than hit and runs. It's covering hitting an animal, vandalism, theft, hail, something falling on your car, those types of things, okay? Most generally, it costs more to have collision coverage than comprehensive coverage. Most generally, a collision claim other than a hit and run will make your premium go up. Most generally, a comprehensive claim will not make your premium go up. However, there are different rules for different companies, so some companies probably would or may make it so it goes up, or if you have multiple of either, that can make it go up as well. So, full coverage versus liability. Basically, the only difference, liability, you just have bodily injury liability, property damage liability, and you don't have collision or comprehensive, okay? If you have full coverage, you're having bodily injury liability, you're having property damage, you're having collision and comprehensive coverage, okay? So you're not required to carry full coverage in the state of Illinois, only liability only. However, if you have a loan on your vehicle, most of the time a lending institution will require you to carry full coverage because they want to protect their interests, okay? Other thing, medical payments. So medical payments is interesting. So basically, it's protecting you and the people in your car. It's not protecting people in the other car, anything like that. That's on the bodily injury portion. This is protecting you and the people in your car. So if you're involved in an accident and you have you and 3 other people in your car, they each have whatever your limit is on the policy, okay? It's per person, okay? So if you had a $50,000 limit on your policy, each person would have $50,000 would be the limit. That is primary to someone's health insurance. So that would pay out first, and then anything above and beyond that would be on someone's health insurance, okay? Uninsured and underinsured motorists. Basically, this is protecting you if you get hit by an uninsured or underinsured motorist, and it's providing bodily injury protection for you and your passengers, okay? So that's what that's covering. The next one, roadside assistance and rental reimbursement. Just two things you can add to a policy if you want. Roadside assistance is usually covering for towing, locking your keys in your car, any other vehicle disablements like jump starting your car, changing a tire, things like that, running out of gas. So rental reimbursement, if your car goes into a shop due to an accident, so it has to be due to an accident, not just to get fixed, an insurance company will pay for you to have a rental car during that time if you have that coverage on your policy, okay? Uninsured and underinsured motorist property damage. This coverage is pretty interesting. So if you carry liability only in the state of Illinois, one of the things that you would want to do is you would want to carry this coverage if you got liability only. It's very inexpensive, and it means if you get hit by an uninsured motorist or underinsured motorist, they will actually pay to fix your car, your insurance company, even if you're not carrying coverage for your car to be fixed. So it's kind of nice coverage to have on there. Factors that go into auto premium. Probably most important, driving history. Tickets, accidents, those types of things, they're definitely getting held against people, okay? So they, depending on the company, get held within anywhere between 3 and 5 years. So they stay on your policy. Vehicle type. So it used to be when I first started, I could look at a vehicle and I'd say, you know what, that's gonna be high to insure. And today, I can't really do that. It's not always about how much a vehicle costs. It's about the parts. How hard is it to work on? You know, is it hard to get the parts? I mean, all these types of things. How much damage would that car create or be in or have to it in a 15-mile-an-hour accident? You know, would it have more than maybe a really expensive one or whatever? But those things are all, the vehicle type is, basically we have to put in a VIN number, and the VIN number is computing a rate based off the actuarial science of that vehicle and its loss history. Is it easily to be stolen? Things like that. Location, where do you live? You know, usually your rate is as specific as your zip code. So Mahomet, paying a different price than Champaign. You know, Rantoul, paying a different price than Mahomet and Champaign. You know, they're all, it's basically almost as specific to a zip code. Actuaries got this down. They know what the losses are in that area. Plus, if you live in an area that is, if you live in Chicago, you can talk about, and you move from here to Chicago, you can talk about your premium going, you know, up quite a bit because more vehicles, you know, more theft, all these different types of things. And so it's more expensive to have insurance there. Again, credit scores, just kind of like what we spoke about on the home policy. Deductibles. So on a policy, you can really control your, if you take out liability only, you're not paying for any coverage for your car, so you can really control that expense and keep your expense down, okay? But if you got a car that's got good value, you don't want to do that. You want to make sure you have full coverage. So then you are carrying deductibles. So what type of risk do you want to take? What type of risk do you want to place onto the insurance company? Do you want a $500 deductible, a $1,000 deductible? Do you want a zero deductible where you don't pay anything and the company pays 100%? You know, those things can mitigate the cost of premium. And then the age of driver. So in the state of Illinois, almost all insurance companies look at a driver that is under the age of 25 as a youth driver. So they can do a lot of things. They can vote, they can go to the military, they can have a family, they can do all these things. But in the state of Illinois, they feel like almost all insurance companies I am aware of consider anyone under 25 a youth driver. If you sat in an insurance office, you would probably realize that, you know, everyone can get in an accident. And we have all types of people in accidents. I've been in my fair share of accidents. But that age group gets in a lot of accidents. And it's just because they don't have experience behind the wheel, okay? And so their rates are pretty justified, in my opinion. Another segment of people that it seems that they pay maybe a little more is the elderly as well. So People, anywhere from like 70 and up, seems like they're pay a little graduated amount too. Now, basically, a lot of it is based off of your driving history and your vehicle type, though. Okay. Next thing is umbrella, and a lot of people don't think about this, but an umbrella, all it is, it's just like the word sounds. So it is encompassing any underlying liability that you're carrying. So if you have an auto, and you have a home, and you have a boat, and you take out an umbrella, that is going to give you, usually it's the minimum amount that you can purchase is $1 million, but it's going to give you $1 million worth of liability above and beyond the limits that you're carrying on your auto, home, or boat. And people are like, well, is this important? It's very important, because if you have assets, obviously you can be sued or you can run out of limits. Your limit can run out, and then it's on you. The insurance company can sign a check to the person that you hit and say, you know what, you've got to take care of the rest of it. Well, then you've got to either come up with the money or find out some other way to take care of it, have your wages garnished, something. But so an umbrella can protect you that. The biggest umbrella probably risks are, there's a lot of risks, but one of them is probably your automobile. Because every time you're getting in behind the wheel of an automobile, you have the opportunity of possibly getting in an accident. So that's a huge risk. Another one that people don't think of is dog bites. So I've had multiple people with dog bites throughout the years. The most recent I had was a lady bent down to pet a dog that she knew very well. When she went to go pet that dog snipped at her, ripped off her upper lip, and she had to have like 7 surgeries grafting skin from her leg to make a new upper lip. Well, when anyone hears about that, guess what? Attorneys get involved, trying to make it right, trying to make sure she's compensated. It goes on the homeowner's liability. So that would be covered under a homeowner's liability, that dog biting someone. But if you've got $300,000 worth of liability and you've got medical bills for that other person that are way above that, the only way it's going to kick in is you better have an umbrella, okay? Now, those things are all rare, but they do happen. They happen all the time. When you're driving down the interstate, you ever see signs when you're driving and it says, call me if you're involved in an accident, call this attorney, call this, it's basically those, lawsuits due to accidents, whether they're dog bites, whether they're car accidents, whether they're other things, they're happening all the time. And so you've got to learn how to protect yourself from anything that you would be deemed negligent for, okay? I'll touch on this just briefly, but another coverage that's very important is business coverage if you own and operate a business, okay? And so the different things that it covers is general liability. General liability is, at your premise, anything happens that you'd be negligent for, you've got liability. What that excludes is professional liability. Professional liability is whatever, basically you're doing for a professional liability. The best way is it's almost like errors and omissions, or malpractice with a doctor, those types of things. So if you do anything within your business that would cause someone harm or a loss, then professional liability would kick in. You'd want your business personal property covered. So any type of business personal property that you had, you'd want covered. Also, there's auto coverage on a policy for business autos, okay? There's building coverages for any buildings that would be, that someone would have. Workers' compensation, I talked about it a little bit earlier, but basically this is to protect any of the employees, to protect the employer from any employees getting injured, okay? And that happens all the time. And that, just to give people a little bit of background on that, is that's kind of based off of the risk. So if you own a construction business and all your people are doing construction work, you're going to pay a higher rate because of the risk of what they're doing. If you have an office and you got people who are just doing clerical work, they're going to pay a lot lower work comp because they're risk, okay? Business interruption coverage. If something would happen where there was a storm or a pipe broke and now you can no longer be in business for a certain amount of time, guess what? That could really hurt someone. I had a restaurant insured not too long ago that there was a water pipe that broke out that was supplying them water, and the city came and said, hey, you can't be open without having water, sanitary reasons, things like that. So it closed them down, and that coverage had to kick in. Now, it usually has a waiting period for its deductible. It has to be closed down for a certain amount of time. Cyber liability. I don't know if any of you heard, but in Champaign, there have been multiple companies that have been held basically hostage by groups that are saying, hey, we have captured your information and your client's information, and we're not giving it back until you give us a certain amount of money, which is usually a very large amount of money that they're requesting. Now, one way to try to keep from that is carrying a cyber liability policy, okay? Inland marine coverage is just equipment, kind of a weird name for it, but if someone owns a business and they have equipment that leaves the premise, goes out somewhere, so if you had like trailer, you had anything like that, like a Caterpillar dump truck or a dump truck or something, it would probably fall underneath there if it wasn't licensed and go under inland marine. So inland marines are not licensed. Auto would be where those would be covered. Employment practices liability, very important coverage. A lot of people don't even think about it. But, what about if sexual harassment or wrongful termination, those types of things, they could fall under that. So that's a very important coverage to carry. If you don't have it, you're on the hook. And that gives representation too. So if you get called out for something like that, and even if you're not guilty, when they have to go look into it, that will offer legal protection as well. So some of the industry trends and challenges, I'll just touch on these real quick, but trends, telematics. So I don't know if any of you in the room have, an app or something in your car that is watching you drive and your habits, but almost all insurance companies, not every insurance company, almost all, is going to telematics where they're gathering your data. So they used to just gather data as a whole, like on different age groups, things like this. Now they can gather your data as a driver. They can award you more discounts. They can basically, I wouldn't say charge you more, but they can reduce the discount that you're receiving for having it. Okay, so there's that. They're also adjusting premiums for higher risk areas. So basically on the home side, hey, I have clients that are snowbirds that are down in Florida. They're telling me what their premiums are doing. They're more than doubling. We have high premiums here in Champaign-Urbana, I believe. Rate increases have been going up with almost all companies over 30%. But in Florida, I mean, I've had clients tell me that their premiums went up 100%. And so that's one thing that you're seeing shift. Reducing coverage to ACV on replacement costs for older roofs. This is hitting everyone. So basically what this means is if you have an older roof, insurance companies are wanting to start to transition you to receiving only actual cash value for a loss on that roof. So what that means is if you have a newer roof, you will get replacement costs. So within a certain period of time, and all companies are different, so I don't want to say how many years, but if it's a newer roof, you'll get replacement costs for your roof if you replace it. However, if it's an older roof, insurance companies are starting to say, okay, now it's 25 or 30 years old, we need to depreciate that roof. We're going to depreciate it on a hail loss or a wind loss, okay? Importance of bundling. You probably hear it on TV all the time. All the insurance companies, there's some really good insurance commercials out there from all the different companies, but most of them all talk about bundling. And if you don't have your auto and home in the same place, you should. And I tell people that all the time, whether it's with me or with someone else, they're missing out on huge discounts if you don't have that, okay? The challenges, increasing claims and costs of inflation. So, materials and labor, they're going up. I mean, everything has been going up. Will it subside a little bit? It may, but it will probably never go back to where it was, especially with some of these things. auto cost of repair and parts, including sensors and cameras. And I'll touch on this a bit, but all these newer vehicles are keeping us safer. So we're seeing people, buy a newer vehicle. It has cameras on it, sensors. It has lane changing sensors. It has cruise control sensors, all these things. But what those things are doing is they're driving up the cost of insurance. And they're driving it up in two ways. They're driving it up for the car itself, okay? So when you insure that car, it's going up. But it's also driving it up for everybody else, because if you hit a car that has that, they know that they're gonna have to pay more. So to let you know, if you can bump someone in the back of a car, rear end them, and not do hardly any damage, and their sensors and cameras may need to be recalibrated. And if they have to be recalibrated, there's a pretty good cost to that. So it's just one of the things that's really driving up auto insurance is these things. And they're all nice, and they all are things that we want on our car, but they're all costing us. Let's see, increasing number of natural disasters and weather events. I mean, it's in the news right now. I mean, we had the hurricane Milton. We just followed another hurricane, and then a wildfire out in Wyoming. Guess what? We're paying for that. Every person that has a policy is paying for it. I didn't feel like that when I first started in 1999. I kind of felt like you paid more for what happened in your area. So if you had issues here, if we had a tornado here, or we had something here, yes, we could see a rise in the claims. Or if we had a big hailstorm here, maybe we could see everyone go up in premium a little bit. But now I feel like when there's something that happens throughout the United States, it's raising it for everybody. So the other thing is that's a challenge is high premiums. So people have to understand that it just keeps going up. They have to decide what amount of risk they want to take and what amount of risk to shove off to the insurance company, and do that with deductibles. And I think you're going to see a lot of people are not going to turn in smaller claims. I really think that smaller claims are going to be a thing of the past. Could be wrong, but it's looking that way. Fraud claims and lawsuits, there's a ton of fraud claims out there. Insurance companies still have to look into them. They have to investigate them. They still have to get attorneys to look into them sometimes. Guess what? That all costs. That drives up the costs. Complexity of policies. This is a huge problem because policies are becoming so complex. People are like, what am I insured for? Now, some people really care, and they want to know everything they're insured for. And just like anything else, some people just want to pay it and cross their fingers and hope, hey, you know what? When something happens, I hope they're there for me. So we prefer the first type, Luke and I do, but policies are complex. They're probably more complex than they've ever been. They're more complex in the rating. They're more complex in the different coverages you can have and things like that. Life insurance. I mentioned I'd just talk about life insurance just for a little bit. This is near and dear to my heart because, what I just talked about was auto and home. And with auto and home, you'll insure your auto because you have to in the state of Illinois. You'll insure your home a lot of times because you have a mortgage on it and your bank's telling you to. But why not insure your life? Okay? So that's the most important thing. And you're not doing it because of you. You're doing it because of the people you love. Okay? It's not about you. It's about the people that you love and who you're going to leave behind if something happens to you. I always tell people this, if you are in my office and for some reason you don't come home tonight, is your family going to be okay? Are they going to be fine? Can they take care of what, the obligations of, debt and ongoing expenses and college costs and, all these things, replacing the income? Can they replace your income? Are they going to be fine? So it's very important that I feel that for people to carry life insurance, it is just so important. I'll have people, come back at me and say, well, my father, he died and he didn't leave me anything. And I always say, wouldn't it have been better if he did? You're not asking for someone to get rich off life insurance. You just want to help it, solve a burden. So like I have a philosophy, right or wrong, doesn't make it right because I'm in the business and I sell it. But my philosophy is, if something happens to me, I don't want my family to have to move and pick up and go to another neighborhood or another town or wherever, because they're already distraught that they lost their father. They're going through a lot, and then to not be able to pay the bills or to be able to handle responsibilities that they would have to even look at moving, or my wife, I don't care if she gets remarried if something happens to me, but I don't want her to feel like she has to go out and get remarried because of she needs the financial security. That's my obligation to take care of my family because I love them, okay? So financial protection for dependents, buy it to pay off debts, buy it to pay for final expenses. Estate planning, sometimes people are over the state threshold, and life insurance, as of right now, the death benefit passes tax-free. So it's a nice way to move money tax-free and basically immediately as soon as there's a death certificate and a beneficiary form submitted. Charitable gift giving. So people like to give to charities. People feel strongly about certain things, and that is one way to do it, is through a life policy. And then business continuation and buy-sell agreements. So if you have two partners and they're in business together and something happens to one of them, do you think the spouse of the person that passed away wants to do business with the partner? Probably not. They would probably like to have the payment to get out of the business, then that makes the other person 100% whole. It's a great way to do it. So it's something to think about. Lastly, there's two most common types of life insurance. Term, it's the lowest cost per thousand, okay? So it is the cheapest insurance that you can buy. It is meant to cover a period of time. It is great for what it is supposed to be. So to cover college costs, to cover replace income during your working years, to cover final expenses, to cover any type of debt that you have while you're trying to pay it off, to protect your children when they're growing up in your household. It's just like I said, it's designed to offer protection for a temporary need. If you want to have a policy to be guaranteed to be there when you pass away, there's really kind of only one way to do it, and that's with a permanent life policy. Now, it's a lot more expensive, okay? Because a higher rate of these are going to pay out. They do accumulate a cash value. Some, not all, do pay a dividend. All depends on how the company is doing at that time. Dividends are not guaranteed with a whole life policy. The term policies in the industry, 2 out of every 1,000 term policies ever pay out. So who's winning in that situation? The insurance company. And that's why the rates are reasonable. That's why it's very affordable. When you outlive that term, okay, you take out a 20-year term and you get to the 20th year, so then you can keep that policy in the 21st year. But boy, does that premium go up because you're 20 years older now. You're closer to mortality, and so they know that. It's whatever fits people best. Some people in later years don't need life insurance. They feel like they don't have a need. Some people do. But if you want a policy that's going to be in place when something happens to you, a whole life is a better bet. It's just understand that it is more expensive, to put in place. Always also, whenever you purchase life insurance, the younger you buy it, the cheaper it is. So if you purchase it when you're younger, you're going to pay less for it, okay? I think that's about it. I tried to cover quite a bit of stuff. It was all pretty, just touched on topics. I could have went in depth a little bit more, but, I'll open it up for questions right now if anyone has any questions. Thank you. Yes?
Can I just get an umbrella policy instead of the other ones?
Great question, but you cannot. So an umbrella policy always requires that you have underlying liability, okay? So with our company, I can't speak for others, but with our company, you have to carry $250,000, $500,000 of liability on your autos and $300,000 of liability on your home. And then it would allow you to buy an umbrella, and that umbrella would protect above those limits. But excellent question, because people ask that all the time. They're like, why would I just not, cover it instead of taking the liability out on the underlying policy?
Right.
Yep.
So, like my term life insurance
Yes.
is going to end. So if I extend it, does that my health condition also affect my premium? Is that right?
It does not. So if you extend it, it's going to go up to whatever the rates are at your attained age, okay? So whatever the rate is for your age at that time. So it's going to go up probably quite a bit. Now, one of the things is it's going to have nothing to do with your health, okay? Because that's an existing policy and they can't hold it against you. You can take that policy. It can be convertible. It could possibly be convertible. What that means is you can convert all or a portion of it to whole life without showing any proof of health. So of your health. So you would not have to show medical records. You wouldn't have to show that have a physical, those types of things, because you already have an existing policy. You could convert some of it if your policy allows you. Most term policies are convertible. Not all are, but most are. If you were to take out a new policy, it would be fully underwritten. So you would most likely have to have a physical, new application. They would look at your medical records and they make a determination on the rate after that. Any other questions? Yes.
So when shopping for insurance policy bundle as a consumer, as a customer, other than the premium, is there other factors?
Hey, that's a great question. So I think that there is, okay? Because, I always say this: do you want steak or do you want hamburger? Do you want something? Do you want the best or do you want just whatever's the cheapest? And in life, some things that you buy that are the cheapest are fine. Insurance might not always be that way, because when you have that time of need, is that person or company going to be there for you? It is so important. If your roof blows off, are they going to be there for you? Can I get a hold of them? Will they have an adjuster be able to get out to my house and take care of me? Will they be able to pay for the claim? What hoops am I going to have to jump through? There's all these different things. If you never have a claim, guess what? Having the cheapest is the best. You never know until you have that situation. And that's where we, as insurance reps, we earn our value. And it's us in the whole industry with all companies. We earn our value of being there to deliver a promise. So when you pay your premium, we are delivering a promise to you that we're going to be there for you, okay? If we're not, what good are we? So we're just collecting money. So, but that's why I think that it is very important to find a company and an agent that will be there when you need something. And there's a lot of them out there. There's a lot of good companies and there's a lot of good agents out there. But I would always do my homework and I'd always make sure of those things. Great question though. Anything else? Yes.
I have a question about the life insurance.
Yes.
For younger kids.
Yes.
I've seen people selling insurance like that.
Mm-hmm.
And if we are considering about that, then what are the factors we should?
Okay. So life insurance on kids, I think, is a great idea. Okay. And maybe it's because I've been in the industry and I've seen the importance of it. But one of the things is you're guaranteeing their insurability. Okay, so I'll give you an example. I had a client that took out a policy on their child when their child was 1 year of age. And everyone says, well, why would they be doing that? Are they trying to profit off of if their 1 year old dies or, No, if that something happens to that 1 year old, there's costs. There's sometimes medical costs. Sometimes there's last expenses like the funeral costs, things like that. There's all these different things that could be costs. But the biggest thing is you're guaranteeing that child's insurability. And what I mean by that is that child that I was telling you about at 1, when that child got 4, that child developed a disorder. And that child cannot get life insurance today, okay? Because there's no insurance company that is going to take that risk. The child has like a life expectancy of 20 to live to like 27, okay? But the parents took out a policy and they have it in place and we can't do anything about it. We're happy that he has a policy in place, the child, and they've guaranteed that child's insurability. And that's something that's great. So that child will always have life insurance, and hopefully that child, they figure out how to deal with it, and they get the proper care, and the child lives forever and has that, for a long time, and has a good life, and has a life policy for a long time, because they took out a whole life policy on a child, and it's going to be there forever for them, and it will be there when something unfortunately does happen to the child. So I think it's not a bad thing to do. Now, I will say this. Whenever mom and dad talk to me about getting a life policy on their kid, I always look at them and say, hey, you guys have life insurance on you, right? Because that's important. You've got to take care of your home first, and then, do that for your children. But yeah, I think it's a pretty good thing to do. So, anything else? Well, Eva, I sincerely appreciate you having me out here tonight. I enjoyed it, and if anyone ever has any questions or wants to ask me any questions after this, feel free to stick around. Thank you very much.